was hoping for. And I would say that applies to Bitcoin, which drives obviously a lot of the momentum in the space and kind of pervades so much of the crypto space, so much of the DAE, but specifically around DeFi. As you were kind of mentioning, I think that you've seen some of the performance of the U.S.-based crypto companies. The tokens associated with those protocols have outperformed. In many cases, I think that's one piece of evidence around it. I mean, there's talk of advantaging tokens that are issued in the U.S., which is again literally the opposite of what we had, for the past few years. So, I think that makes us super optimistic. And it can't be overstated, just the significance of the largest capital market in the world coming online for crypto and be able to maneuver. Our view is that ultimately everything of value will be on chain. I think a lot of that will be in DeFi. And I think we just saw that whole roadmap pulled forward by several years.
Mm-hmm. Yeah, no, I mean, so, it's been definitely very interesting to, literally from the night of the election. I mean, you literally saw the markets just start going, ripping on all levels. And I was just like, one day goes by, two, I'm like, all right, we're going to keep rocking. Like, I can get behind this, and, to that point, like, what do you think we're going to see more, in the markets? Are we going to continue to see this? Are you, what's your take on that going forward?
Yeah, 100%. I mean, I think that the markets are already poised to do really well. I mean, we've been seeing this for the last kind of year and a half. I think we've already been in a bull market, and I think this just unleashed, a lot of those forces to the upside.
Yeah.
Because again, before I felt like, a lot of the capital in the U.S. was somewhat constrained in getting involved in the space. And now that's opened up. And that's great for the entire space, certainly for the U.S.-based companies. I mean, at the 10T level, we've seen a lot of our companies having, all-time highs. I mean, they were already doing well, even just outside the U.S. A lot of our portfolio companies are outside the U.S. But obviously the volume, the dollars emanating from the U.S. and obviously institutions coming into crypto via the ETFs and other publicly traded instruments also starts to seep, I think, into the whole ecosystem as well.
Yeah, Randy, you were managing investments alongside Dan before jumping in like full-time CEO, running Zenrock, with you guys approaching, TGE as well as the zenBTC product in December. Coming from the investment side, like, are you seeing a lot of these institutions that are looking at how to keep exposure to Bitcoin? And you have MicroStrategy, which we've done with Jeff Park, and Ben Workman recently did a live stream. So that's one way to expose to Bitcoin rally. You have buying spot directly. You have the ETFs, and there's all these different factors. Whether it's like the NAV on MicroStrategy has, on the Bitcoin holdings they have. What is kind of like, in your experience on the investor side, institutions, what do they look like when they see like a wrapped Bitcoin product? Is it just keeping that asset on chain? Like, what are some of the value props?
Well, you're hitting on our exact thesis around zenBTC. So, I mean, I would say that throughout all of history, only say 1-2% low single digit amount of Bitcoin has ever been wrapped. I think that's obviously an artifact of kind of the way that the industry has grown up. I mean, obviously there's been lots of security incidents over time. People in the Bitcoin community tend to be most conservative, but we've seen that start to change. I mean, I think that the wrapped Bitcoin market it's grown probably by 2x over the last, call it 6 months. Obviously, some of that is price appreciation, but there's been a lot more. There's been a lot more flowing to wrapped Bitcoin. And I think that, one of the theses we have is that this whole institutionalization of Bitcoin that you're describing, there's lots of different ways to achieve access to it. And I think that there's been a mind share shift in the importance of Bitcoin. I think people have realized that it's not going away. It's not for drug dealers. It's not a scam. I think it's actually trying to becoming integrated into the financial system is a core pillar of the way the whole financial system is constructed. I mean, it's very early days, but I think that we'll start to see Bitcoin as real collateral, and it could end up being like the gold standard of collateral over time. And we'll see lots of innovative products around it. I've started to see it even in insurance, and I think we'll start to see it more in borrow lend. But then going into DeFi, I think that people want to do more with their Bitcoin, and I think that as new users come into the space, who are new to DeFi and have Bitcoin and they read about it, they're going to want to be able to use it. They're going to want to be able to generate yield on it. They want to use it for collateral, for borrowing, for trading. It is by far the best asset for any of that. So that's why we think that there's huge macro trends around something like this. And getting into zenBTC a little bit, one of the reasons why I think people have felt uncomfortable wrapping their Bitcoin in the past is because it's always been dependent on a centralized counterparty. And that was an innovation that was great, say 4 or 5 years ago, but we don't think that trade-off needs to be made anymore. So one of the unique characteristics of zenBTC is it's secured by a decentralized custody network. So you're not relying on one party, you're relying on many external parties that will secure the assets. And the other thing is I think if you have Bitcoin and now you have your app Bitcoin and you want to try to generate yield on it, for a new user coming into DeFi, it's hard to know what to do. So another key element that we wanted to add to zenBTC, for example, is to create it with native yield. So you just generate yield by holding it. Obviously, there will be sophisticated users who will take that yield and want to double it, multiply it, put it in yield, put it in pools to compound that yield. But the base token will generate yield all by itself. So if you're a new user, you don't have to do anything else. You don't have to bridge across any chains. You don't need to figure out what DeFi protocol to use. So we felt that was an important characteristic to start to bring this to the masses.
No, I think that's, honestly, it's going to be, the growth as you touched on just in the past, I don't know, 2-3 weeks, the amount of volume that you're seeing on the exchanges, the amount of, activity. I even think, I'd love your perspective, but I even think like the M&A market's going to definitely pick up. You're getting the investment from the venture capital funds seems, I have this thing that gives me alerts, and it definitely seems like it's been more active, because I think they're getting more of these, if you will, green lights to invest in these applications and companies. And so that being said, one of the questions that I was thinking is, how do you see this changing, like everything that's going on? I mean, we've obviously, as Jody said, the MicroStrategy and all the, craziness going on there. I mean, I think that's definitely going to play over into, firms like, what you're doing at Zenrock, because corporations are going to start looking for places, how can they take their treasury and put it to work? And, what are your thoughts on that? How do you see that playing out? And it's definitely, I would think, is probably a big thing for you guys longer term.
Yeah, you're right. I mean, everything that MicroStrategy is doing, everything that's happening with ETFs and BlackRock promoting it, eventually that's going to filter into the whole advisory space. So all of that just brings more attention to Bitcoin. And the more it's utilized, the more pervasive it becomes, the more powerful it is. So it all is self-reinforcing. And 100%. I mean, there's some of the natural buyers of yield effectively are all the miners need to generate yield on their Bitcoin. We've seen Mara, I think, announced they were going to try to use the MicroStrategy or Bitcoin's treasury strategy, which is amazing. Obviously there will be new insurance products that'll be created, and insurance companies need to be able to generate yield on their assets. I think that you'll see institutions that will need to manage balance sheet of Bitcoin. So there's going to be lots of use cases for it. But I think that there's lots of there's long-term hodlers who want to generate a little bit of extra yield on it, on obviously the best assets that you can hold. And then even those that are a little bit more on the degen side that want to trade more to generate excess returns, say you're trading perps. I mean, it sure is nice to have your Bitcoin collateral yielding to offset some of your funding rates. I mean, so I would say that a product like that, or just the thought of yield in general, appeals to a wide spectrum, all the way from institutions that have kind of needs to manage balance sheet, all the way to people that are more traditionally on-chain opportunists.
Yeah, sorry, I was hitting the mute button. I was stuck on the mute button there.
Yeah. And
okay.
I was going to pull this up too. I think, Randy, good point. One thing we've been looking at is, what's going to be next after this surge from MicroStrategy. Obviously, they're leading the way with, having the treasury, having, the look for like Bitcoin yield. And one thing that Jeff Bark at Bitwise had mentioned is, or maybe it's been working, was around, hey, look, these companies haven't fully, utilized, their yield or their full income potential off these holdings. And so if you look at like after MicroStrategy, something like the Marathon Digital's Galaxy at 26,000 Bitcoin, it's not nearly as big as MicroStrategy, but you have a lot of these companies that are going to be looking to do something with that and probably collateralize those. Are you seeing like on the insurance side, is that where you might have more companies come in? Like we interviewed Aon earlier this year, and they're more like putting insurance policies on for these, digital asset companies. But could you see them also offering type of products related to?
Well, that's where I was going is I think we'll see more products denominated in Bitcoin, like life insurance or insurance is a good example. But as soon as you do that, those insurance companies need to find a way to generate yield on their Bitcoin. I mean, I think that given that decentralized custody is a newer concept, we're going to have to prove ourselves at Zenrock, for example, to start addressing the biggest players in the market. But I think that once people see what we're doing and see the upside of that they're going to look at, well, we could either send our Bitcoin to an OTC trading desk and they're going to lend it out. So there'll be multiple centralized intermediaries there. Yes, there's a lot of things they do to risk manage that. But I think they'll look at that versus a choice where they're secured by decentralized network and generating yield in, I think, a pretty conservative manner on chain, and be able to make that choice.
Yeah, no, absolutely. I know you guys have some, things going on here in the next few weeks. What are some of the things you guys are that are coming up here? Because definitely, this is a market that is picking up on the yield side. And I 100% agree with you. As somebody who's held Bitcoin, it would be nice to earn some yield on it, but, do it in a way that I think is much kind of the approach you're taking. But so I'd love to hear what you guys you guys have coming.
Yeah, we have a lot coming up. So, you'll see us over the next couple of days announce the TGE for our Rock token. This is a token that basically secures the decentralized custody network. That network is also secured as an eigenlayer AVS, so it's a dual token model. We feel that kind of paradigm provides maximum security in a decentralized format. So that Rock token will be launching soon. So we've been really focused on that. It'll be on a few exchanges, on a few dexes. Then very quickly after that, we're pivoting immediately to the official launch of zenBTC. Alongside of that, we'll have a SPL version of our token, because we think that there's obviously a lot of liquidity on Solana. And then you'll see us announce a couple pretty nice partnerships. We're partnering with the top DeFi protocols in Solana to launch zenBTC. You'll see some pretty interesting incentives there to bootstrap the zenBTC token. So we've been deep in the discussions around that. We can't obviously pre-announce what that is.
Yeah.
But those relationships are basically there. You'll see those announcing over the next few weeks. We hope to get everything launched in December. So we just have a ton going on, getting all that over the finish line. But we're right there, and we just see the excitement when we talk to protocols about what we're doing and the potential for what it means to have zenBTC integrated. They're super excited. I mean, they have had other rep Bitcoin providers come and want to partner with them. Obviously, CVBTC is out there. They've launched on Solana. They've done okay. I see that as an adjacency. I mean, they're obviously helping to fuel some of the demand around rep Bitcoin, but I think that we provide a pretty different user experience, a pretty different value proposition from what they're doing. So I almost see them in an adjacency. They're helping to grow the pie alongside everyone else.
Yeah.
I think we're going to see a lot of demand based off of the discussions we're having with our protocol partners.
Yeah. On the Solana side, I mean, you're absolutely right on the liquidity. And one thing we're seeing is rise of like copy trading of different portfolios, different traders. And because, it's very PvP out there if you're trying to like individually trade, just like in stocks, it's most people don't outperform the market by any means. Is that something you guys are looking at, is like not copy traders specifically, but like, hey, let's go to this protocol. I spoke with one last week called the Glider that's building these like ETFs on chain, so like smart contracts that are like portfolios, right? So you could be 50% zenBTC, 20% sold, 20%, you can go down the risk curve. So is that a way to kind of like use partnerships to drive adoption a little more if you can work with some of those?
100%. I mean, so you'll see us launch with, I would say some more of the traditional incentivized pool, like LP pools, vaults. But you're 100% right. There's also another channel where we're talking to kind of wallet providers. Could be asset management protocols where we're featured as kind of the preferred kind of on-chain Bitcoin or yielding Bitcoin option, and make it super easy for users to swap in and out of it. So I think that's a great distribution channel. It's a great way to educate people on what we're doing and to get it into their hands. Because I think once they see how easy it is and see what we're doing, it'll kind of grow from there. So I would say all the above. I would say Q1 of this year, we're going to be full court press on the Solana ecosystem in particular, because we want to generate kind of a critical mass there, dominate the Solana ecosystem as it relates to wrap Bitcoin, and then I think we'll obviously branch out from there eventually, because our core infrastructure makes it very easy for us to move and create native zenBTC tokens on pretty much any ecosystem. But from a go-to-market perspective, from a mindshare perspective, we think focusing the incentives, focusing the mindshare, developing domination in Solana first, where there's just so much momentum. We love the community there. We love the kind of the developer culture there. That if we can dominate that first, I think we'll be in good shape then.
Something that popped in my head actually as we were talking about all this and DeFi and earning yield, something that I think and actually what also prompted it was the quote or the comment from the incoming CEO at Schwab, said that he basically that he regrets that he didn't get into Bitcoin, and obviously it's never too late. But that being said, I think really the stuff you're building, being able to have Zenrock on Solana and then on other protocols, do you see that as opening up opportunities, obviously not just on the institutional, but also on the investment side, like on the wealth management side, and putting that into a, if you will, a portfolio that has, it could have wrapped Zenrock on Solana, another one on another protocol, etc. Because you're kind of going to get the benefit of that, and then you could put it in with other protocols too. I mean, I'm just seeing like this is actually where the market really needs to go, because otherwise you're not. Because right now, if you do if you're familiar, if you do like an SMA with in a portfolio, it's like, what are you going to buy? Bitcoin and another protocol, and they're all going to move in the same, at the same pace. But I mean, do you guys see that playing out? Is that something you guys are going to focus on?
Yeah, I mean, I think first of all, it's a great question. I did see that announcement of that quote saying that kind of felt I
think he's just
invested in Bitcoin early, but I mean that was huge. I mean it's hard to overstate. I mean Schwab has an amazing reputation in TradFi. I mean, they've earned that over many years. They're very conservative, but they're conservative for a reason, because they've earned that high trust over a long period of time. And for an organization like Schwab to start to come around, I mean, it just shows the extent to which the space is maturing. So I thought that was that was one of the things that I kind of checked off in my mind, is like, wow, like we're really making progress here. So I was obviously thrilled to see that. I have a huge thesis around crypto in the advisory space, in particular Bitcoin. I mean, that's something that a lot of people don't talk about so much, because it's not something that's happened so far. I mean, the advisory space is hyper conservative. Right, just period. But there's $100 trillion plus that are advised in the US. It's a massive market. And really, up until now, most advisors can't even talk to their clients about crypto or Bitcoin. There's a few that are starting to allow their advisors to talk about crypto, proactively. Most of them will allow their advisor to react to questions on crypto. Some will not even, but I think that that's slowly starting to change, and it'll take years, I think, to fully phase in. I think, obviously, if the crypto markets go crazy, then the end customer will demand it, and it'll accelerate it, I'm sure. But it's been highly constrained to date. I think you're also seeing crypto and Bitcoin in particular being put into model portfolios, 1%, 2%, 3%. I think that'll drift up over time as people see the performance. So it'll take a while to kind of seep into the advisory space. But advisors also, if they feel comfortable talking about crypto and Bitcoin, they have to understand it. They have to learn about it, because they don't want to be made to look like they don't know what they're talking about in front of their clients. So they have to feel really comfortable about it as well. So that education process also takes time. But the prize there, or the upside there, is massive. So when it happens, I think that'll be another huge sea change. It'll be a wall of money coming into the space, but it'll take time. And for portfolio construction, I completely agree. I mean, I think that, again, just like for the largest institutions, someone like Zenrock and zenBTC will need to prove ourselves over time before, like, a SEC registered RAA will put clients' money into something that's new. We'll have to develop a track record, earn the trust, but 100%, it'll be a much better product to put into a portfolio. It'll be obviously liquid, easily tradable, on-chain, on exchanges, yielding, all the characteristics that people are looking for.
That's what I was telling one of my buddies who's an advisor. Like, he's like, oh, what's the industry done like over the last 10 years? It's just all about, someone coming in lower, getting out higher. And I said, isn't that pretty much what a lot of investing is? Like, the goal, unless you're doing the inverse. But where I'm going with this is, things in this market don't move overnight. Like, price might, but adoption is definitely not going to happen overnight. It took BlackRock how long to get into before they would even touch it?
It takes forever. There's a reason. Conservative, like I was saying, it'll take years to have it happen. But one of the things your friend was probably telling you is, back many years ago, people went to advisors because they were kind of more like brokers, where they would be measured by their trading performance, like they give their clients stock tips and things like that.
That
mostly doesn't exist anymore. Most advisors are actually being paid for advice, and they tend to use model portfolios. So that's why I think that the model portfolio construction that's happening now, where I think you can show through quantitative methods that it actually it shifts the efficient frontier for investing by including Bitcoin. That can be shown to advisors. So I think that they'll start using that. But advisors are really using most of their time building financial plans, making people feel comfortable with their future, not picking stocks, not trying to beat the market anymore. So that's why this whole model portfolio concept is really critical, to actually letting just regular people benefit from the upside that everyone in crypto sees now, but they don't understand it yet. They don't see it yet. For most people, I think some people will, and that's going to accelerate next year, I'm sure.
Yeah, I think we're taking that a step further of just the maturity of the market and maturity of the investor, instead of, like, as Sean mentioned, buying low, selling high, and trying to time those perfectly. It's like now you there are protocols where it's like, make a decision on, like, do I take a short-term capital gains hit because I bought this 6 months ago and it's risen, or do I stake it and get 13, 14%? And right now it's like it does make sense to, like, look at more like income producing strategies in the same way. So what we're seeing is, hopefully, it's like people start to look at, oh, I don't want to take a tax hit by selling Bitcoin, even though it's gone from 97 today to like 125. But what can you do to, like, maximize the capital there, and
Right.
finding ways to lend that out on chain?
Well, that goes back to the point of people, I think, don't want to take the tax hit. They don't want to be out of the market. That I think the whole Bitcoin borrow lend market is going to be massive.
Yeah.
One of the 10T portfolio companies is Ledden. They do that. They're hitting all-time highs. But I think the same thing is going to happen on chain. I just think that's going to be part and parcel to the way people handle Bitcoin going forward.
Yeah.
Yeah, no, absolutely. I mean, you kind of touched on something big there, though, like on that whole lending. I mean, do you feel like we're at a point now where the lending is going to kind of come back full force? Because obviously, as much as we want to forget, it was some rough years that we all went through. But I mean, I think you have rates that could go down a little further, which I think will drive more people into digital asset, crypto, yield. I mean, what are your thoughts around that? How are the rates, in the traditional markets going to play out with what goes on in this market?
Well, I guess just one thing to note on the question, though, is that yes, the borrowing and lending did cause a lot of the issues over the past couple of years. But in DeFi, everything worked perfectly.
It was all human generated too. That why things screwed up.
They were human mistakes that people made, the mistakes that are just classic asset liability management mistakes that have existed all throughout history and finance. So it was actually not specific to crypto really at all. But DeFi did perform perfectly. And like, I think that I would like to hope that people in crypto kind of learn somewhat of a lesson. Obviously, people over enough years, people make the same mistakes over and over again. But with the space maturing and more institutions coming into the space that actually know how to manage ALM risks, I think the chances of that happening in the same way that it did will go down significantly. But I think it's going to be critical to the way people think about their assets. And I think you'll start to see really innovative solutions where you could have kind of loans that pay themselves off. I mean, just things that actually don't make sense in traditional finance. But when you have something like Bitcoin as the backing, you can end up with products that are actually, it's not just something that we're trying to replicate something that exists in TradFi. It actually improves the user experience or improves the outcome significantly using crypto in a way that could never have been done before. Obviously, it'll take a while for that to be pervasive, but that opportunity is there.
Yeah. One other really quick on this topic, I got to ask the obligatory question. So, US fund, basically the treasury creates a Bitcoin reserve fund. What are your thoughts on that, and how does that play into everything going on? I mean, besides that, I think we all think the obvious of, like, if that were to happen, it's like, oh my gosh, FOMO type thing, but would love your perspective.
Yeah, I mean, the obvious, I guess, short-term effect of that would be more demand for crypto. It obviously legitimizes Bitcoin significantly, so that accelerates maybe the way advisors think about it. It accelerates the way other institutions think about it. If it's good enough for the U.S. government, it's good enough for a pension plan, right?
Right.
So I think that there's a psychological effect. Obviously, people have talked about the game theory among sovereigns. If the U.S. communicates a 4-year buying plan for Bitcoin, why not front run that? right? If you're another sovereign and try to buy it faster, right? So that could create pretty nice demand. And there's also other things that are being talked about. Like I mentioned, tax advantages for tokens that are issued in the U.S. That's almost an unimaginable idea a few years ago. Who knows if it will happen, but it's possible. I've mentioned like tax-free Bitcoin. Like who knows if that'll happen? But again, that's almost an unimaginable conversation not that long ago. And if you actually string 1, 2, 3 of these things together, I think the outcome could be,
huge,
way on the upside of what I think even the most bullish people were expecting not that long ago. Now, all that said, I'm sure that it'll eventually be overdone. I'm sure there will be more corrections because people will get very excited when all this happens. But I think we'll see a correction to a level that we're much higher than we're probably expecting.
Right.
Yeah. Yeah. I mean, there's always a ton of FOMO, but it also opens up just like the legitimacy. Like you would imagine that like you'd have several presidential candidates talk about having a specific strategic Bitcoin reserve, and like doesn't seem to be a lot of people with loud voices on the other side of it. There's a lot of things that need to go into place, but if you don't have strong headwinds against you,
there were many voices.
Yeah. There's less voices now.
But I mean, I think it's one of the only legitimate paths to solving the debt issue in the U.S. And even if it only partially solves it, it's a unimaginably amazing win. I mean, I know Michael Saylor's painted kind of a scenario where you could pay off all the debt and more with like the super max, super max plan. But even just the regular plan would be incredible.
Yeah, no, I agree. So Randy, when you have a Rock TGE coming up, zenBTC around the corner post Thanksgiving in December, what's the best way to follow you guys?
Yes, the best way to follow is the Zenrock Foundation has a bunch of social media channels on Twitter. It's called Official Zenrock. We have a zenBTC Twitter channel as well. We actually have a great Discord and Telegram channels. We can maybe drop in the comments how to follow us there. But lots of ways to get in touch with us. Lots of ways to follow the new developments.
Yeah, we'll tweet that out too. We'll tweet out the Discord and the Telegram. Make sure people have the links that they need to to get access to the community. Because I mean, honestly, it's another great thing coming out of 10T. And I mean, you guys have invested in a lot of the major players in the ecosystem, and it's great to see the continued innovation. And I mean, I'm excited to see where this is going to go, even over the next 3 to 6 months.
Yeah, and you'll start to see us doing some pretty interesting things with some of the other 10T portfolio companies. That's part of, one of the ways we can obviously, stack the deck in favor of our success is to try to, work with companies that we know, and because we know what their strategies are, we know how to plug in for mutual benefit. So we're obviously working on that really hard.
Absolutely.
Yeah. Yeah, well, Randy, we'll have to get you back in December. I would love to get you back also. Like, let's maybe get a Solana trader and say, hey, like, how can we, once you have the SPL token live, how can we integrate that? What are some good strategies?
Yeah, I'd love
some good hedging to do? It's good education because I think everyone needs to like have a good fallback risk platform and sell out of the risky stuff when the timing's right. Not enough people take profits and just round trip everything.
Yeah, we'll drop some major alpha.
Yeah,
love it.
Yeah, we appreciate it, Randy. Thanks as always.
All right, thanks
for coming, Randy. Have a great holiday.
All right, you too.
All right, talk to you.